Welcome back to Alpha Recap, your daily wrap of the markets in about 24 minutes. Glad you could join us.
Nice to be here. As always, if you have questions, you can reach us at stockalpha.ai.
Markets closed with a pretty clear split on April 17th. Big moves in crypto and materials, while technology and utilities ran into headwinds.
Yeah, that tracks. There was a lot to unpack. So, what really stands out here is the contrast between momentum pockets and regulatory or operational noise.
Let's start with the headline grabber, crypto. Bitcoin pushed above about $78,000, and that triggered roughly $820 million in liquidations.
That liquidation number is huge. It tells you there was a lot of leverage on the books and a big short squeeze component.
Right, and to be clear for listeners, a liquidation like that happens when leveraged positions get forced out. It amplifies moves in both directions and can make volatility spike.
I mean, when you step back and look at this, on-chain metrics and some institutional wallet flows seem to add fuel, even as Capitol Hill was talking regulation.
So you had momentum coming from the market structure side and narrative fuel from institutional talk. That's a potent combo.
Short reaction.
Big move.
Okay, moving on. Materials and mining actually outperformed on April 17th.
Yeah. Project deals, rare earths development, and recycling wins were all in the headlines. That's the market pricing in more capital into critical minerals and electrification supply chains.
And that ties directly into supply chain reshoring. Companies are positioning for longer-term demand for batteries, semiconductors, and other electrification inputs.
So you get both policy backing and private capital. That makes the sector less about a short-term trade and more about structural positioning.
Short reaction.
Interesting.
Real estate also had a constructive day. Active capital markets showed up with about $200 million of multifamily refinancing in Austin and roughly $58.5 million in a Cambridge loan.
Those are specific examples of ongoing liquidity in certain niches. Logistics demand tied to automation and AI workflows was another theme supporting the sector.
Right, and you could see AI money moving into real estate workflows. Mortgage, title, escrow, which is a good example of cross-sector flow.
Now on the other side, technology had a rough day in parts.
Not a great day for public tech names. A big layoff announcement at a major platform company and active Windows security exploits created sentiment pressure.
Layoffs are one thing. They affect confidence and discretionary IT budgets. But add security vulnerabilities and product execution pressure, and you get multiple levers depressing stocks.
Exactly. You also had private market enthusiasm for AI, like big new funds, pushing capital into the space even as public equities felt near-term operational risk.
That's the bifurcation we kept seeing. Heavy private funding and AI enthusiasm versus public market caution on short-term metrics.
Let's flag one industrial data point that everyone mentioned. A major contract maker reported about a 40% revenue jump, which underscored demand for advanced nodes and semi-cap equipment.
That kind of beat propagates through equipment suppliers, materials, and logistics. It also highlights geopolitical supply chain considerations, since semiconductor capacity is regionalized.
Moving to energy, renewables had a tangible win. A large wind project began generating power, which is important because project ramps are where economics meet reality.
Sunzia starting generation is a concrete example of a project moving from construction into operations. But we also had mixed signals. Drought in parts of the US, fuel revisions, and geopolitical risks near the Strait of Hormuz.
So renewables progress versus energy risk from weather and geopolitics. That dichotomy is driving a lot of dispersion in energy and utilities.
Utilities themselves had regulatory friction. New deadlines from a major grid regulator and panel reliability concerns muted upside despite some concrete solar and storage builds.
Right. Regulatory timelines matter a lot for utilities because rate recovery and procurement frameworks determine whether projects actually add to earnings.
Healthcare was mixed too. There were pockets of clinical upside, like a positive update from a biotech name, but safety questions around GLP-1 therapies and a new CMS reimbursement proposal added uncertainty.
I mean, when you factor in trial headlines and reimbursement uncertainty, even companies with good science can see volatile reactions.
Exactly. Clinical and regulatory risks often create binary outcomes, and those get priced quickly.
Let's unpack a few of the cross-sector themes we saw.
First up, AI and automation as deal makers. Big new funds and VC activity were headlines, and AI is moving into real estate and retail workflows that links tech capital to property and consumer modernization.
Right, and that shows how capital flowing into one node, say AI software, can ripple into semiconductors, materials, and even logistics property.
Second theme, energy transition versus energy risk. Projects are progressing, costs for things like hydrogen fell, but weather and geopolitics still move fossil fuel prices.
Third, supply chain reshoring and materials security. That was a strong theme with rare earths and recycling deals. It's all about securing inputs for electrification.
And finally, regulatory and policy noise. Crypto rallied amid Capitol Hill chatter, utilities faced regulator deadlines, and healthcare dealt with CMS proposals. Policy risk is layering volatility on otherwise favorable trends.
So what were the most notable moves? Bitcoin above about $78,000 and the roughly $820 million of liquidations was the headline.
Then you had that about 40% revenue jump from the big semiconductor foundry. That's a signal that demand for advanced nodes is strong.
Pattern Energy's wind project starting generation. That's a milestone you can actually measure once commercial operations begin.
And on the downside, the mass layoff announcement at a major platform company and active Windows exploits were big pressure points for tech.
Utilities saw regulatory timing headwinds too. New deadlines and rate discussion created uncertainty even with some project wins on the table.
Let's make some of the jargon friendly. When we say liquidations in crypto, we mean leverage positions getting closed out automatically, which can produce rapid price moves.
And capacity factor for a wind farm. That's the actual output over time versus its maximum possible output. Investors watch that to see whether a project performs as expected.
Also, on-chain metrics are simply pieces of data from blockchain activity, wallet flows, transaction volumes, open interest, that help indicate who's participating.
Short reaction.
Helpful.
Now a few actionable insights, strictly informational. First, watch policy calendars and regulator deadlines. They moved sectors on April 17th and they can do it again.
Second, distinguish structural drivers from cyclical ones. Materials and renewables are behaving like structural themes, while parts of tech were reacting to near-term operational headlines.
Third, monitor liquidity and leverage in speculative pockets. The crypto liquidation event is a reminder that derivatives and leverage amplify moves.
Fourth, track real asset yields and financing availability. The refinancing and loan activity we saw shows lenders are active in some niches, and that affects property returns.
Right, and fifth, pay attention to cross-sector flow effects. AI dollars ripple into hardware, real estate, and materials. Moves in one node can create winners and laggards across the chain.
A couple quick portfolio implications: high-level and non-personalized. Volatility management matters. The coexistence of big crypto swings and regulatory noise argues for mindful position sizing.
Seek differentiated exposure to secular trends like materials and renewables, but be selective. Project execution and permitting introduce idiosyncratic risk.
And technology, be selective. Companies with recurring revenue, strong balance sheets, and clear AI exposure are getting more attention than names vulnerable to one-off operational issues.
And keep an eye on credit-sensitive assets. Real estate and industrial flows depend on bank lending and wholesale funding, so deposit and credit pricing shifts matter.
Looking ahead, catalysts to watch include regulatory calendars, FERC deadlines, congressional sessions on crypto, and CMS rulemaking cycles.
Earnings will matter too. That big semiconductor revenue beat shows how company results can reset expectations across supply chains.
Also, watch renewable project ramp metrics. Actual generation, curtailment, and merchant versus contracted sales will tell us if the economics match the headlines.
Macro and commodity shocks, weather, geopolitics, inventory data will remain near-term drivers for energy and materials.
And for crypto, keep tabs on market structure and regulation. Custody frameworks, exchange licensing, and any clarity on fund rules could change flows materially.
It really is a reminder that nothing lives in isolation. Everything's connected.
Final takeaways. Markets closed mixed on April 17th, with concentrated theme-driven moves. Crypto volatility can dominate headlines. Materials and real estate showed constructive momentum, and tech faced operative and security headwinds.
Policy and regulatory noise remains a key risk multiplier. Data suggests staying attentive to calendars, liquidity metrics, and project economics as primary navigation tools.
We should emphasize the usual caveat. This discussion is informational only. Analysts note risks and catalysts, but this is not personalized investment advice and not a recommendation to buy, sell, or hold any security.
Yeah, exactly. If you're making decisions, consult a licensed financial professional for anything tailored to your situation.
Okay, quick reactions to end on.
That crypto move was wild.
Materials looking solid.
Tech, a reality check.
All right, that wraps our recap for April 17th.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Catch you next time on Alpha Recap.